Hey, welcome to Live at Noon. This is DeDe Jones with Innovative Financial. Today we're talking about opening your own company. Are you thinking about starting your own business? Well, I'm sure if you are, you've already discovered there's so many things to consider when you're thinking about it. First of all, what kind of company do you want to start? So today we're not talking about what you choose in particular, but we're going to talk about some general considerations that you need to think about as you begin your journey on the really exciting and rewarding path of starting your own company. Our first category today is talking about personal cash flow issues. As you start your own company, there's a lot of things that will change in your personal cash flow life. And it's important that you plan for them. So are you going to need to use your own personal cash to open this company? That could make a difference on how you get this funded. As you're starting this company and you're taking on greater risks with this new company, how about the rest of your financial world? Is your risk tolerance changing because of the risk you're taking over here? If it is, you may need to work with your financial advisor to adjust the risk exposure you have on the rest of your assets. And absolutely key, something I hit on in a lot of topics, is an emergency fund. If you're starting a new company and maybe leaving a regular 40-hour-a-week job, you might need to expand your emergency fund to account for the fact that you might not be able to fully replace your income with this new company. And related to that, what's your contingency plan if things don't grow the way you expect them to? And understand, is your plan to have this company be your sole source of income? So these are all topics around what's happening to your world personally. If you are partnered, your wife, husband, spouse, significant other, these questions are going to affect them in a big, big way. So this is a topics that you should understand well and be able to share and articulate with your partner so everybody's on the same page and they know exactly what to expect. Related to the cash flow issues for you personally are the business. In your new business, what cash flow, what will it look like? Do you need to research the amount necessary to launch and run the business? Think about costs in two categories, really. The initial cost of getting things up and running, and then once you're there, what does cash flow look like after that? Funding those two needs might look different. Lump sum to start off, and then ongoing, or perhaps a line of credit for the ongoing needs. And how long are you going to need perhaps help with the financing? In other words, when will the business cash flow and provide adequate income for you? In the meantime, you might need to be looking for government loans, grants, traditional bank loans, or raise capital from friends, family, other third-party investors, or a GoFundMe, perhaps. But understanding how the cash is going to flow. This is just, playing around on the spreadsheet and getting a good sense of the ins and the outs of the money in your company. How will money flow through that company? And once the company's up and going, do you expect it to be fairly steady or fluctuations? Think in terms of seasonal companies like an amusement park. In the age of COVID, that might not be a good example, but in the Denver area, an amusement park is busy in the summer and completely shut down in the winter. So their cash needs ebb and flow depending on the season. And they would have a loan at a bank that's a revolving line of credit so that they have money for the short-term needs, but pay them off seasonally. So that's cash flow as it relates to the company. The next area we're going to talk about is business formation. Now, depending on the complexity of your company, this is one where you bring in your advisors, your accountants, your lawyers, etc. But let's talk about what your choices are as you're thinking about this. There's specific legal structures around companies that it's important for you to know. So the most basic formation is a sole proprietorship. If you've ever filed your tax return, you've seen something called a Schedule C. Maybe when you were a kid, you mowed lawns. That's where you would have reported that income. The IRS calls that a disregarded entity. So just remember that if you run into that phrase. Then we have something that's called a partnership. Again, really, really easy to form. It's a separate entity. They get their own tax return, but for tax purposes, it's a disregarded entity as well, in that the income flows through to the owners. And so flow-through entities are very popular, but there's no liability protection. So we'll come back to that one in a minute. And then there's corporations. So a C Corp is if you're investing in the stock market, those are all C corporations where they have taxation at the company level and again at the distribution level to the stockholders. But it can be a good choice in certain situations. They have the strongest legal protection for the owners, by the way. And then finally, an S Corp. That's, again, a flow-through entity. The company does its thing for the year and then defines the income and expenses. And that information is sent to the owners, who report the income and expenses on their tax returns, hence the flow-through. Still has nice legal protection for the owners, flows through, so you get some of the individual taxation benefits. So those are the legal formations as far as taxes go. And then there's this overlay called an LLC, a limited liability company. And depending on the state where you are, they can be very easy to set up. Some states certainly do make it a little harder than others. Colorado is actually very, very easy to do that. A limited liability company allows you to create a moat around the business so that if something goes awry in the business, you've protected your personal assets. And you can use an LLC with a partnership, with an S Corp, a C Corp. I haven't seen it done. I don't know why you would do that. But very, very often with a sole proprietorship or even real estate investments, because it gives you that protection for your personal assets. So understanding the form of your company is important. Whether or not you need that extra protection of the LLC is important. Where you form your company can make a big difference too, depending on the nature of the service and the particular exposures that you have. Certain states have different rules around company formation, and it's smart for you to research that and know where is the right place for you to incorporate. Now, starting out, you may or may not have employees, but if you do, it's real important to create employment terms, outline exactly what you have and who you're hiring for, so that you don't run into HR issues. You may need to register with the state for workers' comp, unemployment insurance, as well as tax collection issues. And you'll have choices around what kind of retirement plans are available to you. Those are topics that will take up a chat for another day entirely. When we talk about the formation and ownership, are you going to be the only owner? That makes things pretty darn easy. If you're going to have another owner, a partner, it's absolutely critical to have a clear communication about who owns what, who's the decision maker, how much everybody's contributing, how much they will be compensated, etc. I always recommend that people sit down with an adult beverage of choice and talk about the company, the relationship, and actually do a bomb-proof test. Talk about every way that the business could be torpedoed and devise a plan to get out of it. So if somebody dies, you have a buy-sell agreement, hopefully funded by insurance, so that everybody becomes whole. Nobody ends up with a partner they didn't plan on, like the surviving spouse. Say there's a divorce, what happens then? Can the company be part of the divorce settlement? We hope not, so there'll be ways around that. Maybe somebody just wants to retire or is tired of the business. How does the remaining owner buy them out? So understanding that agreement is absolutely key. Having a succession plan. An ongoing business absolutely needs to have a succession plan that can include buy-sell agreements, like I mentioned, for smooth transfer of ownership. We can fund that through insurance, through buyouts, depending on if it's a death or still alive. If you're going to bring in your children into the business, there are tax-efficient ownership strategies that you can take advantage of in your annual gifting and estate plan. If there's intellectual property to protect, it's, again, very important to bring in the attorneys so that you can protect that asset, because that could be key to the success of your company. So huge numbers of topics around business formation. Next, we're talking about tax planning issues, near and dear to my heart. Being a CPA, we talk about this all the time. Will your personal tax situation change? And if so, consider the following. Understand how the choice of your entity or your operations are going to affect your personal tax. You may have self-employment tax or corporate tax. Taxes are going to be paid in a variety of ways, and it looks a lot different when you own a company than when you're an employee. So working with a tax advisor can help you understand that and plan for that flow of cash out. Know that when you're starting up a company, there's costs that are deductible. Home expenses, health insurance costs, other business expenses, and certain of the startup costs are deductible as well. And like I mentioned, your personal tax situation may change. You might need to start paying quarterly taxes to avoid underpayment tax penalties. So it's important to understand that. If you're selling a product, you may need to collect and pay sales tax. Get educated on what's important in your area and how to handle that. And a big one here are you eligible for the qualified business income deduction? That's a chat for another day entirely, because that's its own big checklist that we'll go through. So that's not quite our whole checklist, because there's a lot of other issues we'll cover on another day, but that's a great start. If you're thinking about starting your own business, things to think about. If you'd like a copy of this checklist, reach out to us. We'll be happy to share it with you. Thanks for joining us today. Be sure and like and follow us. We're here 3 times a week, live at noon, Mondays, Wednesdays, and Fridays, answering your questions. DeDe Jones with Innovative Financial. We'll see you Wednesday.